Okay, goes bond yields to reverse and pump to new highs. Yen dropping, the persistent flow of short covering on bonds stopping for 3 days. Think about it. If they're covering on bonds, why? Why do you cover shorts? Come on, you guys can do this. I believe in you. Well, they're not losing money, right? Yields were like the highest they've been in like 10 years, 20 years. Almost. Risk of holding the position is not worth it. Manage risk. Okay, well, there's two reasons. You either think that you've realized the full potential value of the short and you're taking profits, or you think the position is going to move against you and you're removing risk. Both of these are the same thing, right? But they have different intentions, right? They would also be realized at different speeds. Like if you were removing risk, you might see shorts pulled back at breakneck speed, right? If you're taking profits, you do it slowly over time. Now, if you're short bonds and you're pulling back your short position for one of these two reasons, that means you think bonds are either going to sit there and do nothing, that no further upside yield is going to be realized, or you're afraid the position is going to move against you rapidly. Now, given that bonds have dropped like a rock over the last 6 days, I would say that the move is definitely fast. It doesn't seem to be calm or collected. It's coming right on the back of the YCC change, which is more than just a coincidence. And what are bonds inverse? Equities. Very good. These are negatively correlated. Penises? Ah, dang. You knew the right answer too, Dork. It was right on the tip of your tongue. So if you're short bonds, then you're what? Equities. And if you're long equities, you're short what? The answer isn't bonds. Come on, there's one more. There you go. Because that allows you to exit your short position without, I'm going to get to that part, but give me a second. If you need to cover your bond short, but you don't want to get squeezed out of your bond short, how do you do that? How do you make it safe to cover your bond short? You would go long equities, short vol, right? And so what that does, and that'll get it back to you, Theta Decaying Corpse, is it means that large swaths of participants are not going to view the action in the bond market as negative. Right? And you can exit your short bond position before bond demand increases. If people think everything's going to be fine and volatility is down and equities are massively up, they're not going to want bonds, right? Why would you want bonds when equities are moving, especially when they're moving the entirety of the yield curve in 5 days? Like we've exceeded the peak yield in 6-day returns, right? And everyone's going to be like, "Oh, I want to buy equities. This is amazing." I know one thing: if the carry trade collapsed, I would not want to be short U.S. Treasuries. Like I said the other day, I don't think people grasp the importance of Japan's decision.